Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Rocket Lab. This was an update requested the last video I did. Sorry, I meant to do this last Sunday, but I was sick. I've been sick the better part of a week, so hopefully I don't cough in the microphone today, but today I will be talking about Rocket Lab. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Rocket Lab, so this video should be for your entertainment purposes only, because I could be wrong about everything that I say in this video, and you need to do your own research before making any investment decisions. So, with that disclaimer out of the way, let me jump right into talking about Rocket Lab, and in particular, I want to start off with the big picture. So if you're not super familiar with the company, or the 30-second summary or 10-second summary is they're a space company. They have a rocket that they already use today called Electron. It's a small launch rocket, so it's not the same as the Falcon 9. It's much smaller than that. So not currently sort of a competitor to SpaceX. They also have a number of other components that they make. Satellites and solar panels and reactor wheels. Sorry, I always get that. I say the wrong thing. A bunch of other components that are used on spacecraft. And so there are even missions that they do not launch, that are not rockets of their own they're launching, that they also have components that they sell to other companies and are used in those, that they've had. We get into that later if I have time for that. But that's sort of the general scope of the company, and the strategy for the company they've really started to elaborate on more recently. Yeah, the rocket emojis, that's exactly it. For this company, and that's generally my feelings and for the long term of this company. I think there's clearly some risks, and I'll go talk about those later, but most of the risks are pretty obvious. I think there's a ton of potential. But right here, this slide on their investor presentation is really the important strategy of the company to understand, right? This company, they say they want to build an end-to-end space company. And when they say end-to-end, that means, today the service that they sell is, they sell the launch on Electron, right? We will sell you the service of putting your stuff on a rocket and sending it up to space and putting it where you want it to be in space. So they're selling you launch. They have all those other components that they could also sell to you, the solar panels that are space grade, those sorts of things. And that's all good, right? And that there is I think a growing market for these things. I think there's some nuance in terms of the launch market, and obviously there's competition for, what components do you need, those sorts of things. But that is all still not their goal of being an end-to-end space company. And they haven't quite gotten to this point of being able to fully articulate it, but their vision is folks who are launching something into space, or folks who are saying, hey, I want a solar panel, I want a satellite. They don't truly care about the satellite usually. Usually they care about what that satellite can do for them, right? Can it take pictures? Can it beam data from this point to that point? Can it get information from somewhere else in space? I mean, that's, I guess, another thing that somebody might care about. And that service of, can you beam data from here to there through space without having any wired connection anywhere across long distances, right? Or can you send me pictures from out in space? That's the actual services. And that's why I say here, if you look at the slide, the end use case for the company of being end to end is for Rocket Lab to manage the rockets, Rocket Lab to manage what type of satellites you need, what components need to be on them. They'll handle all that stuff. Someone else will be paying Rocket Lab for the service of, give me pictures of this, or, and again, I don't know what that particular service will be. The company themselves has not identified that yet, or at least they haven't publicly announced it. And there's still some steps they need to go through, but I'm spending a lot of time on this because this is the long-term direction of the company. And it really helped me to understand the company and be super bullish on, at least in terms of what the potential for this company could be, when I started to understand that this was the strategy. And you start to see the things that they're doing, they make a lot of sense. They are actually, to me, it makes sense. They're they're moving towards being able to do this as their end state of the company. So, as I said, they already have a small rocket. They're working on, that's called Electron. They're working on Neutron, which is their medium launch rocket that can, bring a lot more weight up to space. It goes from, I want to say Electron is, off the top of my head, something like 300 kilograms. Maybe that goes up a little bit, up to 500 or 700, depending on the circumstances. 700 kilograms, that is. But I think Neutron is going to be something more along the lines of 13,000, if I recall correctly. And so that is obviously sort of an order of magnitude more weight that they'll be able to handle with Neutron. And that is going to let them put a lot more things into space. And their strategy here, as they call it out, is we want to have the rockets, because in order to use space, you got to get there. And then they want to have the spacecraft, the satellites, all their components, and even the software. And that's an interesting bit. And I'll be honest to say, I haven't dug that much into the software of Rocket Lab. I think they did a partnership not so long ago with somebody who ran some sort of mission control software, something like that, maybe. I'll admit I haven't done my full due diligence on those to understand it. But personally, as a software engineer, I think that's software might be some of the least difficult pieces of what Rocket Lab is capable of doing and what they will need to do in the future. But getting back to the strategy, once you can get to space and you have the things that you would want to put in space that can provide those services once they're up there orbiting Earth, now all of a sudden you can sell somebody else, the government or a company, the service that government or company wants. Not, hey, I will get your stuff to space. Hey, you can purchase a satellite from me. They can just say, yep, we can get you those images of, this area every 12 hours, at this level of resolution. Those sorts of things, right? That is a service that they could sell. And this is why that strategy, what they're working on, is very particular about giving them the options to be able to handle those, end use cases, that space data and services, as they call it. And, this isn't, it's not, it's not new, right? This is literally what SpaceX did, where they have Starlink. They provide Starlink. Starlink is just a service to people. And, people who buy Starlink aren't buying satellites. They're not buying space on a Falcon 9 rocket. They're just buying internet service. They don't know anything about, they know how, but they don't really care how it works as long as it does work. And I think that's the end state for Rocket Lab. And so I know that was a super, super long kind of monologue here, but I think this is the most important thing to understand about the company, because it puts everything else into context. And, if you're a long-term investor, I should say, if you're a, short-term trader, like I really have nothing to offer you. I can't predict the short-term movements of the stock, even in the next, 6 months or a year. I think there's a lot of uncertainty there in how the company will be valued. And I could talk about that a little bit later. We can pull up the chart and just kind of opine on it for a couple minutes. But if you're a long-term investor, that is where they're going. And so I think the question that you should really ask yourself, and the question that I asked myself, was, is this sort of two bits? Number one, is that a good end state, right? What would the company be worth if they were selling these space data and services? And I am pretty sure, I'm personally confident, again, not financial advice, but I'm personally confident that if they get to that point, they're selling these space data and services, that is going to be worth a lot more than what they're currently making in, any sort of revenue or income, right? Like, that it's going to be more profitable. It's going to be significantly more revenue coming through the door. And then the other question is, can they actually achieve it? And that's why I sort of went on this long monologue saying, this is their strategy. This is personally why I'm fairly well convinced that they will be able to achieve it, because they're being very intentional and they've had successes along the way. Obviously, we just need to watch, will they continue on with those successes? So, all right, very, very long, maybe intro or sort of framing for how I view the company. Let's get into, maybe a little bit of the specifics. I guess I could mention a couple of things before I go on to the specifics of the company. Let's get into Electron here. That I think will be good. And so let me get right over here. And so Electron is their small launch vehicle. That is a photo of an Electron rocket right there. And a couple things just to note is Electron obviously is a small launch vehicle, but it has some advantages. One thing that it has both for the Rocket Lab side, and this is not necessarily for the market, for the people who are buying launch services, but on the Rocket Lab side, they can control their costs in a way that no one else can, not even SpaceX, because they are vertically integrated. And specifically, they have their own launch pad. And as far as I understand it, the company has mentioned this, and I haven't seen anything to contradict it. This, I believe, is the only privately owned, rocket launch pad in the world. They have that in New Zealand, and so they are able to control a lot of things that other companies cannot. Right? There is still, regulations and just the fact that in the U.S. these launch pads are shared. They're owned. They're not owned by any private company. So that is one advantage they have. And one of the things that I would say Electron really has been able to show, I think they've got the chart in here somewhere, is how many launches they've had. Here's the chart. It might be a little small for you to see. I could zoom in just a tad bit, but the point here is Electron is that red line. The Falcon 9 is the purple line, and they're showing since the first launch, over time, how many additional launches happened. And they made the point here that Electron recently had its 50th launch, and they said, Electron actually got to 50 launches faster than the Falcon 9 did. And that had previously been the fastest, rocket to get to 50 launches. And the point that I was getting at is not necessarily this speed, although that's excellent. The point that I was getting at is they've been consistent, they've been reliable, right? And so I think Rocket Lab has this advantage that other potential competitors in the small launch market do not, which is they've launched a lot, they've got a track record of reliability. And, people who want to put their stuff into space, I have to imagine that's going to be pretty important is, do I trust that this company that I'm paying money to is going to actually get my stuff to space? Because I do not believe, if I understand the market correctly, there's been some interviews, and I don't know anything firsthand, but there's been some interviews, and I believe it was Peter Beck, the CEO, Sir Peter Beck, excuse me, the CEO of Rocket Lab has said that Rocket Lab doesn't guarantee that these things go to space. So if the rocket blows up, Rocket Lab doesn't, and no one else in the industry does, right? That launch providers provide launch as a service, but that they don't guarantee the payloads. And, companies can contract their own insurance, those sorts of things. But having insurance doesn't change the fact that the thing that you built may have taken a certain, amount of time to get to that point, has blown up and is not in space when you wanted it to be. And that is a humongous risk that other folks who might be looking, other competitors in the small launch space that they're trying to, break into the market and sell the service to other folks, they're going to have to compete with Rocket Lab and say, yeah, we know that Rocket Lab's done this, 50 times, and like roughly, I want to say 48 of those 50 have been successful, something along those lines, right? It's like 95%. We know that they have been very, very good on this. And in general, it's a hard thing, and lots of people have tried and failed. But trust us, we think we'll be the first to, now be, very, very reliable from the beginning. I have to imagine that's a hard sell for a lot of people. And so I think that, to me, sort of solidifies Electron as having a pretty big advantage, right? That's sort of, it's not exactly the same, but it's similar to, you think about a company like, Facebook. I'm sure if you're an investor, you've heard of, the network effect, right? Where once most people are on Facebook and using Facebook, Facebook is valuable, and no other, social media service that's basically just the same copy of it is going to get people to switch, because everybody wants to be where most other people are. It's not to say that other companies, other apps, Instagram, TikTok, whatever, weren't different enough that people viewed it as a different type of app than Facebook. But I mean, there were, if you're old enough to remember, there were a lot of other competitors to Facebook back at the time that were basically provided the same functionality, and Facebook basically won out because it had more people. And so when other people decided which app of these am I going to join, they're like, oh, well, I'll join the one that most of my friends are on. And then that became a self-reinforcing loop. And it's similar for, it's not the same, but it's similar for Rocket Lab, is sort of my view, where Electron's had so much success in the small launch space. Somebody is, wants that, rather than being on a, rideshare Falcon 9 or needing a medium launch vehicle. If a small launch is appropriate for them, then Rocket Lab has the reliability, the history of being reliable. That's an advantage that's going to continue having people come to Rocket Lab preferentially over other competitors. And again, maybe somebody will come along and they'll have it so much cheaper that other companies are willing to, try out the other service. That's certainly a possibility. If you can discount the price, you can potentially lure some folks away. But I think that's a big advantage that Rocket Lab has that kind of solidifies Electron as being a very, very stable, viable portion of the business. So it's most of my thoughts on those things. So I'm going to take a drink real quick. Excuse me. Like I said, I'm still getting over being sick for off and on for about a week. All right. So if we go back just a tad bit, let's see, where am I at? Maybe back to here. Let me get it to fit to the page. Nope, that's not what I wanted. Rotate. No. There we go. Sorry about that. Apparently I can't handle my PDFs. All right. Couple other things I wanted to mention is this has been a big deal that folks have talked about. It's something that the company has clarified quite a bit over the past 3 to 6 months. Just something that I would reiterate to y'all if you don't follow the company super closely is one issue that they have or the people think about is, oh, how many launches did you get per quarter? And indeed, that's how I thought about things before. If you've been around long enough to see my original analysis on Rocket Lab, I started to model things out in terms of, rough model, how many launches will they get for Electron per quarter, and sort of that translates into the revenue. And that is correct. But there's an interesting aspect to this, which is even though the revenue for, GAAP accounting purposes does get recognized on the date that the launch occurs, most of the cash the Rocket Lab gets from the customer has already been collected well before the launch. And that's what this slide here is talking about, where they say, there's one of two ways we can do it, either time-based billing or milestone-based billing. I don't think those are meaningful differences for investors to really care about too much, because the overall point is they collect 10% when the contract gets signed. They collect, 20% along the way when there's some early milestones or when it's 9 months early, when they make sure that their spacecraft, can fit. Presumably that means the rocket's been manufactured. They collect another 30% or maybe 6 months beforehand, right? And I have to imagine these roughly are similar, the time versus the milestones. It's not really material to understand those intricate details, but the point here is they're collecting money, some when the contract's signed, some, quarters ahead of time, collecting cash from the customers. So even if launches move around, because this has been another issue where they had launches planned, I think for this year they had, 22 launches planned, and now they're saying they're going to do somewhere like 15 to 18 in this year. So this sounds like a major miss for them. But as they've said, none of those misses were due to Rocket Lab. It's all been because of customers not having their stuff ready to put on the rockets. And it doesn't actually impact their finances that much. Obviously, there's going to be some costs if they have to keep extra rockets around that they expected to launch. In the warehouses, whatever. But excuse me, I'm sorry. But the point here is it's not impacting their finances too much, because even if the customer doesn't end up being quite ready on that date or a couple weeks before that date, Rocket Lab's already collected a bunch of cash from them. So even though they don't get to recognize the revenue for GAAP purposes, they've got the money in their bank, which is the most important thing here. So just something to understand, again, that this is not quite as lumpy as you might expect in terms of them getting money from launches when you just look at how the launches themselves move around in terms of dates. A couple of the things here on Electron before I move on is, you might ask, what is Rocket Lab capable of doing? If every customer was ready and they had more customers come and sign contracts and want this service. Adam Spice recently in one of the investor conferences said that he thinks they could produce 50 Electron rockets per year, and that their launch pad could even support 100 launches per year. So they right now are limited by the market demand, as it seems. which has been growing. And he also said in that same interview that it's not hard to see where they're going to have 20 or even more than 30 per year Electron launches. Although he doesn't think that the demand would go up to 50 per year, for example. So basically from that, I'm reading that we can expect it to continue to grow over the next couple of years and probably top out somewhere around 30 launches per year, which is what I'll have in my model once I get to going through that in a little bit. But that is most of the overview of Electron. One thing I would call out here, kind of talking about numbers of launches, is they did sign this huge deal with Synspective for 10 launches, and that's a massive contract. That, as I mentioned, this year, I think they're going to do roughly 15 to 18. And so, 10 launches is like roughly two thirds of their entire, what they're going to do this year. And so that was a very large contract. They have 4 launches also for a confidential commercial customer, not a confidential government customer, which is, interesting. But once again, they're able to sign these launches and they're going to get them. And that, I think, just once again is validation that Neutron is going to be a fairly stable, growing portion of their company. One other note I would mention is Electron is not reusable at the moment. That is on the roadmap for them to support, but that they have their, sort of competent folks who could work on that, more all focused on Neutron right now. And so that brings me to, let's just go ahead and talk about Neutron. And Neutron is, let's see, that's a photo of the actual engine that's going to go into the Neutron rocket. I don't know if they have good renders here. Maybe that's probably the best one, where you can see there's a bunch of different components they've been producing. They've tested a bunch of stuff. They have more tests ongoing. There's a page on the Rocket Lab website where you can follow along some of the milestones there that they plan to go through in terms of developing the Neutron rocket. But suffice it to say, they've been working on this for quite a while. They did slip, that they delayed it by 6 months. They were originally expecting to have this done by the end of 2024, and they delayed that by 6 months to the middle of 2025. So that was obviously very disappointing, but I think even middle of 2025 is going to be good, as long as they can keep to that schedule, right? If every 6 months they delay by another 6 months, that's going to be real bad for the company. Sort of tying that back again, as I mentioned at the beginning when I talked about the overall vision and strategy of the company for getting to be an end-to-end space services provider, as what the core of what the company does. Neutron is a big piece, because in order to provide a good chunk of those services, they're going to need to launch more than just, 1 or 2 small satellites here and there that they could do with the Electron. They're going to need to launch, constellations of satellites, and that's what Neutron will be capable of doing, right? Because it will be a much larger vehicle. And so that's a critical capability that Rocket Lab is going to need if they're going to be able to be, vertically integrated and control all of their costs as a space services provider. Sorry, I need another quick drink. Give me just a moment. But you can see here, these are, a number of their components they've been producing here on the left as part of the vehicle. And on the right, you can see the infrastructure, whether they've talked about the actual launch pad, their actual testing. And they've actually mentioned this. It was interesting. It was a bit of a side comment in one of the interviews. I don't even remember who it was, if it was Adam Spice or Sir Peter Beck, who are the CFO and the CEO of Rocket Lab. But they mentioned seeing these hardware in the loop testing people, and I think it was one of them. I believe they said something like, "Oh, in simulation, this hardware in the loop simulation, right? There's actually the hardware moving, but they're also working off a simulation at the same time. These folks have already landed the rocket like 100 times." Something like that, or launched the rocket 100 times. I don't remember the exact quote, but basically it was interesting to hear them that, they've really thought this through to the point where those folks already have the infrastructure set up for them to run simulations on this. And again, simulations are not the real world, so they could run into issues on the day of. But, they've been doing this for quite a while with Electron very successfully. That's the big bet that I think a lot of us have on Neutron being successful early on, potentially from its very first launch, because they have actually done such, they have such a history with Electron where they've already learned a lot of lessons from those. So super interesting. And they've got all this infrastructure they're building, also on a timeline in parallel with all of the components for the rocket itself. And they've made the point multiple times that yes, we are developing Neutron, but all the work that we're doing right now is not just to build one Neutron for one launch and then declare success and say, great, we were able to do one. How do we do another one? Instead, their focus is on, let's build all the infrastructure. Let's make sure that we have a design that's, repeatable, reproducible. Let's build the actual components so that after we build one Neutron, we can build another one and then another one and then another one, right? And that they've actually thought this through as a business that owns, manufacturing and those sorts of things. So that is, really good to see. Excuse me. So that is a good chunk about Neutron. A couple other notes that I have here for Neutron is that they did recently finish what they called as one critical milestone, and that's when the actual Archimedes engine, the engine for the Neutron rocket, did go through, they called it a hot fire test, and that's when they actually, had the thing burn some fuel and, test it out and make sure everything seemed to work properly. Again, I do not know enough about this, and I'm just not sure if there's enough details publicly available for those of us who are not in the industry to really learn it quickly. But they went through this test, they declared it successful, and they think that this was one of the big ones that was an outstanding risk for the program. And so now that this has been passed, they're continuing on with more tests, but this is one where it did pass, and they've been talking about this for quarters ahead of time. Let me put it that way. And so once that one's passed, I think some of the others are more maybe less risky test, and maybe less of a test where they expect things, if it doesn't go right, that it might fail and they'd have to go back to the drawing board or redesign. But instead, a lot of the other tests might be understanding the behavior of the engine, making sure that it's within tolerance in various ways, those sorts of things. And so this was really good. A couple other notes about the Neutron rocket itself. They are designing this and planning for it to be reusable from the beginning, from their very first launch. And I don't know if I mentioned or not, I think I did, that Electron is not reusable. And so they are designing Neutron to be reusable from the very first launch. And so that's interesting and also very, very good from a margin standpoint for the company. They stated that they expect their average selling price for a Neutron launch to be $55 million. For context, if I haven't mentioned it, Electron runs somewhere around the $7 to $8 million range. I think they mentioned that their current backlog of Electron launches has an average selling price of $8.2 million. And I think there's a couple of variants there where some of them are significantly more because they're, because of the mission requirements. Some are cheaper because the mission requirements are less. But, that gives you an idea of the difference here, where Electron is somewhere around 7 to 8. Neutron will be 55 million. So one Neutron launch is equal to, 7 or 8 roughly Electron launches. So Neutron launches are going to have a big impact on the company. And as Neutron starts to scale up, Electron is going to be less and less impactful to the company from a financial standpoint. I think it's still an important capability for the company to have, but I don't think that it's going to drive a lot of their revenue and profits in the next couple of years as Neutron scales up, or their costs even, right? Once we go to the point where they want to be an end-to-end space services company, once again, the costs of Neutron being reusable and having sort of a higher, presumably higher gross margins on that are going to be better for the company versus making Electron reusable, because Neutron is just going to presumably comprise a much larger portion of their own costs as they're launching satellites into space to serve space services. So that is sort of an overview of Neutron. I think that's all that I really wanted to highlight, I think, from this investor presentation. Let me see if I had anything else in my notes. I guess we could talk about a little bit of some of the space systems. And I'm spending a lot of time on launch only because I think, that's more tangible, more important for the absolute hardest things that they do. But space systems currently actually generates most of their revenue. Again, that's only with Electron going on, not with Neutron. I think, when Neutron's around, that could shift. We'll see. But the components, the space systems portion of the company. Yeah, so here gets the space systems. You can see they've got these giant contracts with the SDA and the MDA Global Star contract. The SDA one is in its infancy. The MDA Global Star, I think they're actually delivering on that one actively, and so that's why you see some of this tick up in the space systems revenue. But this generates more revenue, and this is very, very important for the company as well. It's kind of I don't want to say, it's not, certainly not under the radar. It's less talked about, I think, than the launch portions of the company. They did talk about a little bit of some of their acquisitions they did that are now their divisions of their company. Talking about some of their contracts here. Where I wanted to get to, so they're talking about a couple of the different actual divisions here, right? You can see that on the right side here. They have separation systems, satellite radios, reaction wheels, solar arrays. Right, that's a big one. Composite structures, in-space propulsion, flight software, and star trackers. Those are a whole bunch of stuff. I will even just state up front, I don't know enough about all of these to really have a lot of opinions about them. I do know the profitability of some of these should go up over time, in addition to actually just growing revenue, because the market itself for space, I think, is growing. The margins for a good chunk of these should go up because, most of these came from acquisitions, and Rocket Lab themselves has said, a lot of these folks we acquired because they were small mom and pop shops. They weren't seasoned business operators, let's say, and that there was a good chunk of efficiencies to be and scaling that they could get out of these businesses. And, with all of that comes some increased margins. And in particular, I know that they've called out the solar panels. The Solero acquisition said, we had this really, really bad, poorly priced contract, let's say, things that were just priced below what they should be, that they couldn't get out of. And I think they even said in the 10Q that, they expect about $7 million more in losses from that contract, that, that they have currently listed as a liability on their balance sheet because, it's just a bad contract. And that's going to be a drag on their profitability for the rest of this year, but that should improve even in 2025. I think with these businesses as well, as I mentioned, Rocket Lab bought them with the intention of scaling them up, and I think they have done that for these businesses. And so just with additional scale, usually you also are going to see increased margins in addition to the growing revenue. And so that's something that, as time goes on, I expect to see space systems both grow in revenue and also incrementally go up in profitability. So not too much else to say about that. Again, maybe I spent less time on it than I should have, but it is important to the company. There's just not as much for me to really say. One other thing I would note is, if you're starting to look at some of the numbers for the company, Rocket Lab has a gigantic backlog. Right now, at the end of Q2, they had over $1 billion in backlog here, right? And that's most, again, like 3/4 from space systems, about 1/4 from launch services, and that gives me a lot of confidence. And a lot of that comes, I can go back, I can't remember what exact slide it was. It's all the satellites there. A good chunk of that is from the SDA contract, from the MDA Global Star contract. Those are massive, massive contracts, especially the excuse me. Sorry about that. The SDA contract was, I want to say, $500 million just by itself, somewhere in that vicinity. So, these contracts really drive quite a bit of their backlog. And that is, it's good today because they have that giant backlog. And as they're able to deliver on that, it's also good because they're eligible for more similar size contracts. And so you could see this, space systems growing very quickly. I wouldn't expect this to go on forever, but it could double in a year and then double the year after that if they got just a couple of these significantly large contracts. And they've publicly said that they're always out there bidding on these things. The timing, whether they're going to get them, you don't know. It's, they're up against other companies or competition, and not that much competition, but there is other competition out there. And, the timing of when they might be able to get them, super unpredictable. A lot of these are these largest ones, again, are going through like SDA, which is part of the government, the U.S. government. And, they can't predict the timing on a lot of these things, when they're going to actually be awarded, or if they'll get, broken up across multiple companies. You can never really know with the government. But the point is, they have a lot of potential in that space to build their backlog very quickly, and then turn that into revenue over the course of a couple of years, whatever it takes to deliver that contract. And even more so, they've talked about, again, going back to the overarching strategy to be a space services provider. They've said, hey, we think it'd be even better if the government wasn't out bidding for contracts for satellites, but instead they were bidding out contracts for this service that we want a constellation of 18 satellites to do for us, or a constellation of who knows how many satellites, just that this is the specification of what we need this constellation to be able to do. And to sort of frame the contract itself, their requirements, to state this is the service we need. And, I think they've had one or two examples of that. But to see some of these larger contracts really be put out that way would be a bit of a shift, I believe. But that's a shift that in the future, if and when they get to that point, because I think the government, if they were able to just buy a service, would just buy a service. They don't necessarily need to own all of these assets. Maybe I'm wrong. Maybe for national security reasons, they do actually want to own the satellites sometimes. That's a possibility. But because, I don't know, right? I'm going to go and just sort of talk on that for just a minute. I'm sure the government uses internet services, and they don't own every bit of the actual internet backbone themselves that connects things, right? Even for sensitive topics, I'm sure that they do that. I have to imagine that space stuff would be similar, because once they actually have those satellites up there, they have to worry about operating them and maintaining them, and eventually decommissioning them and replacing them, as the sort of the satellites at the end of their life for their components. And those are all things that I'm sure the government would rather not have to do, because those are, of course, they're not doing it themselves. They're going to contract each of those additional sort of incremental operations out to some other company. But do they really want to have to manage all of that? If they were able to just pay a company entirely to say, operate this constellation for us for the next 5 years, they can, or provide this space service for us for the next 5 years. Done, right? The government would absolutely prefer not to have to deal with any of the details if they don't need to, if they can just have a credible company to do those things. And that, as I was getting at, tying it back to the bigger picture, when Rocket Lab is in a position to do all of those things, they have, 95% of the capabilities in-house, and they can control all of those costs. They can control the schedule and be confident that they can deliver on those contracts. They're going to be in an excellent position to start to serve the government in that way. Government and other companies, but I'm just saying the government, because you already see these, like the SDA contract here, where the government's already getting in this business, but they might even shift one more step and go just say, we want space services. Who can provide those for us? Rocket Lab will be one of the few that can, without being, without subcontracting out a whole bunch of other stuff and having to manage all those operations, through subcontractors. That's the large picture, the big point that I'm trying to make. So that is, that's a big portion of, where space systems currently fits in. Let me go through some of the numbers real quick. And by the way, I haven't seen any other questions or comments on here. So, if you have any questions as I'm going, feel free to just drop them in the chat. I know at least Transient Stacker was here before, and so if you're still listening, I mean, that's great. If you don't have any questions, by all means, keep listening. But if you do have any questions, feel free to leave them in the chat. Going through some of their numbers, a couple of things, because I want to shift back to the finances. It's all great to look at those things, but at the moment, they are a revenue losing or a money losing company. If I go, let me just real quickly go through the most recent 10Q here after I take a drink. And so you can see 3 months ended June 30th, 2024. They had an operating loss of, $43 million, which is, par for the course for this company. If I go back, I actually have their numbers. Hopefully this is not too small for you to see. I have their numbers going back since for about 2.5 years, since the beginning of 2022. You can see their operating income, I've highlighted them right here, has been, about negative 30 million, negative 50 million. Maybe I even have this in a chart. Can't think of any question. I'm driving in LA traffic. Oh, well, be careful. Thanks for hopping on. I really, that's hopefully I'm making your drive a little better. Sorry you have to deal with LA traffic. I've never been to LA. I've been to similar area, San Francisco to the Silicon Valley area once or twice, and the traffic was awful. Was not pleased with the traffic there. I like it much better out here in the Midwest. Anyways, operating income, if I scroll down, I think I do have a chart. Yeah, I do. And you can see here, it's been roughly in the same range. And if you look at this, it looks like the trend is getting worse. And, technically it has been, where it's gone from, roughly the negative 30 million per quarter down to about roughly negative 45 million per quarter, and doesn't really seem to be getting better, which is, technically correct, but certainly doesn't tell the full story of the company. I also put together sort of a chart of their cash operating income per quarter. This is also relevant because a good chunk of their expenses are non-cash expenses, still very meaningful for GAAP purposes. So I want to make this distinction here where non-cash expenses are very real expenses to the company and to the investor. However, they aren't actually taking cash to pay for them currently. And so when we talk about things like, since they are not profitable, since they're not cash flow positive, how long can they sustain? What is their current run rate with the cash that they have in the bank? That's where this cash operating income per quarter makes a bigger difference, right? Because this excludes things like stock-based compensation, amortization, and depreciation, which again are all, in my opinion, for the most part, in most businesses, real things that you should care about as an investor. But if I'm just looking over the next, year, 2, 3 years, how much cash they burn per quarter, those things are not necessarily, they're not taking cash to the bank account. So in terms of how long can they subsist, they aren't relevant. So anyways, their cash operating income per quarter, once I subtract out those non-cash expenses, it does drop it down to a loss of around $20 million per quarter rather than the $40 or $45 million per quarter. And so when I actually translate that into a run rate, again, because I care very much about, can Rocket Lab, with their current cash, how long can they continue burning what they're currently burning, to know how long is it going to be until they have to raise money? Are they in imminent danger? Are they going to run out of money before they're able to even develop, let's say, Neutron? Those are all, questions that matter. And you can see their run rate actually bumped up quite a bit. If you can see the chart here, sorry, if you're driving, don't look too hard, but, they recently did this raise, where this is the number of quarters they have in terms of run rate versus their cash burn. And they recently raised somewhere around $300 million, and that gave them quite a lot of run rate. And maybe this is the better chart really to look at, where if I look at their adjusted operating loss, how many quarters can they go? And as of right now, again, as I mentioned, they're burning roughly $20 million of cash just from operations. I think there is a little bit more that they're spending on interest now, although they have the convertible debt. So I probably should have factored that in. I didn't, and so maybe the numbers are a little bit rosier here than they really should be. But the point remains that they've got more than 10 quarters worth of runway, and so that's more than 2.5 years, and probably more like 3 or 4 years, frankly, in terms of their current burn rate. And I think their current burn rate is fine because this is what they're spending as they're actually developing the Neutron rocket. Once they get Neutron off the patent, start to get the benefits of that, I think some of that spend, they're going to see the benefits of that, number one. So they're going to get some revenue and some profits coming in, from Neutron. And some of that spending in the R&D area is going to go down because, of course, I think the people are going to stick around. I think Rocket Lab has uses for those people to continue iterating on certain components of Neutron, maybe going back and working on Electron and working on developing reusability for that rocket. But I think the expenses that they're using for prototypes, for building infrastructure of let's test out the simulation to be able to land Neutron, those sorts of things, those are kind of like one-time expenses that they're not going to have to redo again. And all the prototypes, all of the one-off components are pulling off to the side because we want to use them in our simulation. Those expenses are going to go away. It's going to be a one-time drop in their R&D that we should expect to see, the quarter or two after Neutron actually launches, as they've proven that out, and now they can shift into more of just a manufacturing mode for Neutron. So this gives me a lot of confidence. So the overall point here, it gives me confidence that Rocket Lab has plenty of cash in the bank right now for a number of years, so we don't have to worry about them going back and having to raise money anytime soon. They even said that they raised this money hoping they would be able to do some acquisitions. They haven't yet done that. I'm still waiting. It'll be interesting. It's not obvious to me because I'm not in the industry which portions of that overall the overall picture of launch, all these space systems and the services, all the components. It's not clear to me what they're missing in order to then deliver on that final vision of being an end-to-end space services company. And if they are looking to acquire, I think that's where they're trying to be strategic about it and saying, what are we missing out of here? What can we keep bidding on? Just let these people know, hey, we'd like to buy your company. We'd like to buy your company. They've got the cash in the bank. They don't have to go try to, get an offer accepted on somebody contingent on Rocket Lab, raising the cash, or Rocket Lab diluting shareholders a whole bunch. We already know how they have the cash in hand. So they do have that. And that's all to say, this runway, maybe some of this cash would be spent for something that's not just a general, eating their current cash flow burn. Maybe they will use it for an acquisition, but they've been, I will give it to management. They've been good with their acquisitions they've done to date. And, I have to continue believing in the team there at Rocket Lab that if they did burn down some of the cash, they're in a much better position than the rest of us to know what does that do to their run rate? What does that do given their cash projections as they're burning money for Neutron and what they expect to bring in once Neutron starts launching. So that all gives me plenty of confidence with their cash burn as it goes. And if we look at their actual gross margins as a percent, that has not gone down. It's gone slightly up for space services, for launch services, which is red here. It's kind of trended up over time. Q4 of 2023, probably I should make these bars rather than line. Sorry for that. I should just fix my chart for next time. But launch services had a really bad Q4 of last year because of that failed launch they had. That was they called it their anomaly, and that was their first failed launch they've had in quite a while, years, I believe. And not only was that a failed launch, it also grounded Electron, by the FAA for a certain portion of time, so that Q4 of last year had, I want to say, only one launch, which was one of their, I think I have a chart down here. So two launches, I guess. But that was one of their worst quarters in almost in 2 years. So luckily, it did turn out to only be an anomaly. We know that now that we have 2 more quarters of data, and we saw that they did 4 launches in Q1 and Q2 of this year. But I think that's something just to see that their gross margins have continued to kind of be fairly stable slash going up a little bit, over time. I think we can expect those to go up ever so slightly over time, specifically for, I think the space services as they scale and they're able to just become more efficient because they're moving more volume. And similarly for launch services, there's a lot of fixed costs in launch, like all the launch pad, the facilities to build the rockets, and all the machinery to build the rockets. And, they said that they have capacity to build 50 per year. And so obviously I think they'd have to hire a little more people to actually do more work, but all the machines as such would just be, that's the same fixed costs that they're already paying just to launch, 15 per year and 12 per year. So that would just incrementally push up their actual profit margins for those segments of the business. And that's what we should expect to see as Electron does launch more frequently. One other thing that I do track with Rocket Lab, again, because they are not profitable and they have been, as I mentioned, doing some stock-based compensation, is their shares outstanding. You can see since the beginning of 2022 to the middle of 2024, it has gone up from about 463 million shares to about 496 million shares. And so I think, sorry, I need a drink. I think that comes out to roughly 4 to 5% dilution per year in terms of, just looking at the share count. It was really good when they did the convertible raise that, they raised the convertible debt, except then they basically did an initial capped call transaction so that they expect to be able to buy back the shares or a large portion of the shares depending on what the stock price is, right? It's only if the stock is well above that conversion price and also, excuse me, well above the price, that Rocket Lab was trading at when they did the deal, that there would be any shareholder dilution at all. I think it has to be somewhere north of $8 or $8.50 per share before there's really any dilution that comes from that entire transaction once it settles in somewhere between now and 2029, right? It's going to have to settle, I think, at 2029. I believe is the end of the period. I think they were 5-year bonds. So that is at least one good thing where the company does seem to care about this. They do seem to care about minimizing their dilution. 4 or 5% per year is not horrible in terms of, how much stock are we handing out for stock-based compensation. I don't think they don't run any sort of at the market offering or anything like that where they're literally just, funding through dilution. I think that the cash burn that they have, because they are not quite cash flow positive right now, is just coming from the cash that they already have on their balance sheet. All right. Let me go through my also simple projection model that I have. I broke this into 3 sections. I have Electron, Neutron, and Space Systems. And I'll give you the caveat right up front, which is this goes out 5 years in the future, into 2029. Then I have a rough valuation of what the company could be at, reasonable multiples, as I think they would be in 2029. So again, this is trying to do a projection forward of what the company could do, and then looking at what would be some sort of a range of fair value in 2029. You can work your way backwards to today and decide, what does that mean for yourself, for the stock? Do you even believe my model? Those are the questions you need to ask yourself. But I will also, as I mentioned, give the major caveat here of this totally ignores the final stage of the company's strategy, which is to be an end-to-end space services provider. So the way that I use this model here is really to look at how are they getting to cash flow break even? How are they getting to GAAP profitability? What would it look like even if they fail to become an end-to-end space services provider? And I think that's important because it's a bit of a plan B here, right? The company has not been particularly forthcoming about those things. It's possible that, when I say they haven't been forthcoming, I mean, they haven't identified a concrete service that they intend to provide. They don't have customers for those things. There are a lot of risks. It's a great vision. They're doing all the right things to give themselves maximal chance of achieving that vision. However, there's a lot of risks with that are, out of their control. There's a lot of risks there that are not engineering problems. That, you have to deal with what markets even exist. What are the competitors? Do those markets need, competition? And frankly, I say those sorts of things just to look at and say, if they came out tomorrow and said, well, we want to have an internet-based space or a space-based internet service, aka they want a Starlink competitor. Okay, can they beat Starlink? Probably not. Does anybody really does Rocket Lab have some inherent advantage over SpaceX? Probably not. Is there some other, constellation based service that Rocket Lab could provide that SpaceX couldn't just copy? I don't know. It's not obvious that there is anything. And so it does beg the question, is there, is that a major risk? And I think that it is. And it is a risk that they have in the space services portion that they don't necessarily have in the launch portion. I think some companies are going to have needs to go to space. Companies, governments, needs to go to space that, they don't want to work with SpaceX for. SpaceX can't do it fast enough. SpaceX can't launch exactly when they want to launch, exactly where they want to launch, other mission requirements. I think those aspects are pretty clear. Space systems, those components, companies, there's a number of a growing ecosystem where, folks do need those components that they produce. However, when it comes to the services portion, as we mentioned, that's the most lucrative. It's the most lucrative market that the company can be in, and so we should expect that there's going to be the most competition. So all those are the caveats to the fact that this model doesn't include it, and so even this valuation could undershoot what the company is able to do on a long enough timeline if they are successful in those space services. Those space services markets, right, where they're able to just contract to a company and say, we'll give you imaging, we'll give you whatever. You don't need to own any satellites. You don't need to manage any of that stuff. We'll do it all. We'll just sell you this service. So if that comes to fruition, I think this model is probably a bear case for the company, meaning there's even further upside if the company does achieve those things. And I think it's quite possible, but this model doesn't include that. All right, major monologue just to get this point. Sorry for that. I know I'm long-winded. I'm sure you probably do too by this point if you've watched me more than once. So real quick, going through this, I go out 5 years. I look at Electron. I model it as how many launches you're going to have per year, what's your revenue per launch, and then based on that, multiply out, you get the revenue. And then what is your gross margin on those launches? And, then from that, you compute your Electron gross profit. For Electron, I have it going from 16 launches in 2024, which I think is roughly what they're going to do. And I think at this point they've said 15 to 18 is their expectation, up to 30 launches in 2028. And I figure it tops out at 30 launches there. And so we have 30 launches in 2028, 2029, sort of scales up between here and there. I also sort of just picked out some numbers that I think represent a reasonable ramp for their gross margin percentage on Electron to go up from 30% all the way up pretty close to 50%. And again, I think they've said if they can get Electron to have some amount of reuse, that they can do that on at least 50% of the missions, because sometimes they can't reuse the Electron because of the mission requirements and exactly what they need to do with the rocket itself. But if they can do that even on a significant portion, on like half of them, I think they've said that they could get up to 50% gross margins on Electron. The gross margins also go up even if you ignore reusability, just as they're able to amortize those fixed costs that they have for launch pads, machines, etc., over a larger number of launches, right? So once they are launching more per month or more per year, those gross margins as a percentage just go up because some of those costs that go into Electron are just fixed costs. So margins go up from 30% to 48% over the course of 5 years. For Neutron, I started it out with one paid launch in 2025, scaling up to 3 to 5 and then to 10 and 20. Excuse me. And that might, I think in the past they've said that was their stated goal, was to do 1 the first year and then 3 and then 5. That gives them a comfortable sort of ramp to really ramp things up. But I think after that, it's reasonable to think if the demand actually is there, that they would go from 5 up to 10, and from 10 to somewhere around 20 even the year after that. So that is what I think is a fairly reasonable ramp up for Neutron. Maybe it will be. I can make an argument either way. Maybe that's too conservative, or maybe that's way optimistic. 20 launches in 2029, just in 5 years from now, when they've done 0 so far. Again, I actually think this is neither conservative nor optimistic. I think it's a fairly realistic ramp. Again, this is predicated on Neutron actually being successful next year when they try to launch it. Of course, if that fails, all bets are off. But again, if you trust the team at Rock Lab, excuse me, I might need to try to wrap this up. If you trust the team at Rocket Lab, you think they're going to do a good job. This is my best guess at their modeling here. I kept the revenue per launch at $55 million. I just kept that flat. That's what they believe their average selling price is going to be. I just left it there. I didn't try to bump that up because they are competing with Falcon 9 for sure, with SpaceX and potentially with other competitors. I think there are more competitors trying to enter the medium launch market versus the small launch market. And so I think that's not something that they're going to be able to compete on in terms I don't think they're going to be able to raise their prices too much here. So that is, I've just kept that number flat. And then for their gross margins, I sort of assumed at the very beginning they're going to be pretty bad when they only have one launch per year. Tons of fixed costs. Maybe it shouldn't even be positive. Maybe it should be negative. But I think, as it sort of ramps up, even to 10 and then especially to 20 launches per year, I think we should see the margins get up into the 40% range. And so I have that going up to 45% in 2029 when they hit 20 launches. For space systems, sorry, my throat's getting bad. I'll try to wrap this up without coughing too much. Year-over-year revenue growth, I put this at 25% for the next 3 years, then going out to 22 and then 20%. And I put that here just because, they've already got, roughly $750 million backlog. They added $500 million of that with just one contract. They signed a couple more of those. It's not hard to see that this revenue is going to continue growing at a 25% CAGR basically for the next couple of years. And I think that's also in the context of a space market itself that is growing. So to me, that growth seems fairly realistic. I also think their gross margins will in turn grow a bit. I have them going from roughly 28% in 2024 all the way up to 33% in 2029. Again, I don't think this is ever going to get like 50% gross margins. I think about 1/3 is where they're going to top out here for some of those components. Maybe I'm wrong, but I think that's a fairly healthy margin without cannibalizing their business, right? And that's mostly margins expansion that's coming not because they're necessarily raising prices and capturing just more profit that way, but they're actually producing more, able to benefit from economies of scale here and expand their margins that way as they optimize their own business. All right, so add those all together and we get some revenue and then, more importantly, gross profit numbers from Neutron, Electron, and the space systems. Take out their R&D, SG&A, and I put in just their interest expense, like $6 million per year. I think that's from the convertible debt. I should also mention for the R&D, this is a fairly big assumption for myself, but I'm assuming that the R&D spend from 2024 to 2025 is going to drop because, when Neutron launches, I believe there's going to be sort of this one-time drop where there won't be as much spending on prototypes, etc., that they did have to do to develop Neutron, and they won't have to do that on a forward basis. But that then, growth in R&D spend happens at a 7% CAGR for the years afterwards, going back up to $210 million in 2025. Sorry, 2029. For SG&A, I just put $120 million for this year, which I think is roughly on track with what we've seen in the first half of the year. And then I assume that increases at a 6% CAGR. No real basis for that, just, it's probably going to go up every year. It is what it is. I have no reason to think it's going to skyrocket, but I think it will grow over time. And then that gets you to sort of these net income numbers that I have here. As you can see, for this year, that's a net income, a net loss of roughly $200 million. And they continue having a GAAP loss in 2025 and 2026. I think it's likely somewhere in, by the end of 2025 and that quarter, maybe beginning of 2026, you will see that cash flow break even happen, even though the GAAP numbers will still show a loss because, once again, you have depreciation, amortization, and stock-based comp that will not be burning cash, but will count against GAAP numbers. But again, that gets you to a loss in 2026, but probably flips, if all those things happen that I said, to a GAAP net income of about $50 million, is rounded off, in 2027, and then growing pretty quickly after that, right? That I actually think it could go up roughly 4x from 2027 to 2028, going to about $200 million of GAAP net income in 2028. And this is a bit of a stretch, they could get to somewhere around $500 million of GAAP net income in 2029. So, and again, the way that you get those numbers, I laid out all of my assumptions up here. Mostly that comes from Neutron going from 10 to 20 launches, because your gross profit on Neutron excuse me, goes up by about $250 million. So that explains most of the jump here. Space Systems and Electron certainly help out, but Neutron will end up being the major profit center for the company if they can achieve those numbers. And again, maybe those are too optimistic, but I think they're probably in the ballpark here. So you look at that, and in 2029, having a GAAP net income of $500 million is a massively profitable company, especially for a company that is continuing to grow. And so if I look down here at what valuations we could expect, I actually ran through two ways to value the company, and I did a valuation both in 2028 and in 2029. Again, in 2028, they're getting to GAAP net income of about $200 million and revenue of about $1.5 billion. In 2029, it's revenue of $2.2 billion and GAAP net income of about $500 million. So if we look at it on a PE basis, if they were, excuse me, if they were valued at what I think would be a ridiculously low valuation, for a company that has all the aspects they do, at a 20 PE, they'd be at $7.16 in 2028 and $16 in 2029, again, because that GAAP net income really more than doubles in my model from 2028 to 2029. One other important bit, sorry, I should take one tiny step back, make one small comment here, which is I also assumed that their shares outstanding would continue to grow at about a 5% CAGR. And so they will grow from, roughly end of 2024 having 504 million shares all the way up to 643 million shares at the end of 2029. So that is my other assumption in terms of how much dilution is going to go on from their stock-based compensation. But if you go up even to a 30 PE, or what I think is more to the point, a 50 PE, let's just look at that line here. In 2028, the company could be roughly an $18 stock. 2029, it could be roughly a $40 stock. Now, if they were continuing to grow, right? If neutron demand actually was not capped at 20 per year and they thought, the year after was going to go to 30 or 40, then it's certainly reasonable that they would get a 50 PE because of that expected forward growth as of that point in time. So those are some of the numbers that I think are reasonable for the company, again, without them even getting into the end-to-end space services business, which is their stated end goal and ought to be more profitable than even achieving all of this. And so if they get to that point, then you could see PEs are even higher because the company is getting credit for, some of the space services stuff. If you look at again, I also put some multiples here for price of sales. They come up to roughly similar numbers. I think if you were looking at something like a 7 to a 15 or 7 to 15 price of sales, which I think it would probably be fairly high, but maybe not so high based on their growth. It does get you to very similar numbers, $17 dollars per share in 2028 based on a 7 price of sales, and 24 based off of 2029. And that's, again, just a reasonable way to the company could be valued if there was not massive future growth coming. And the one other thing that I wanted to call out here, and I'm almost done. Sorry, I know I've been talking for over an hour now, which is just a ton, but I actually have delved fairly deeply into this company, and I just see a lot of potential for it, and so that's why I'm spending the time on this one. I start to look at this and I say, somewhere around 2026, they're probably going to become cash flow, hit cash flow break even, become cash flow positive, and 2027 they're even in GAAP net income profitability. That tells me by this point they are going to have money coming in that they could reinvest. What might they reinvest it in? Well, deploying their own constellation, right? So I didn't put the free cash flow numbers on here because I didn't really differentiate all the depreciation, stock-based compensation, all that stuff in these expenses. If you figure by 2027, maybe they're hitting maybe closer to $100 million of free cash flow. Maybe 2028 closer to 300. 2029 maybe even 600, 650. That's your money right there that you're going to have for starting to bankroll and starting to deploy your own satellites to provide services. Again, other companies are going to want to just sign a contract, pay them for those services. Presumably, the space services they can provide, presumably those companies will give them, maybe 10% down, 20% down, something like that when the contract is signed. But the majority of it, and maybe that's not the case. The majority of it, I have to imagine, they're going to pay as the service is, provided. It would be something like a recurring revenue stream for the company where once they have the service they can provide, the consumer of that service, whether it's a government or a company or even a consumer application like Starlink can be, those consumers of the service might just pay for the service as they consume it, just like Starlink, right? You sign up for it, and nobody signed a thing and said, "Hey, please deploy a satellite for me first," and or deploy a constellation of satellites for me to give me the service. No, they just said, "Cool, I want to start paying for Starlink," and of course, maybe you get the unit or whatever lets you, install to let you actually participate in the Starlink service. But in general, it's already there and operating. Folks pay for the service as they consume it, and so I think that's where the money is going to come from for Rocket Lab to get that, the infrastructure in place, all the satellites built and deployed, so that they can just start providing that service, which should be much, much, much more lucrative. And so I think, this model I have here, I'm just reiterating, is a plan B for the company, and their plan A, if it works, is going to even blow these numbers out of the water. But it does even show you how they can get to a point of profitability, start to have the money to start to deploy a constellation of satellites to provide services. And again, they can also raise money at that point. Once they hit free cash flow positivity and even getting to the point of having some gap net income, they're going to be in such a strong place. Their stock will probably be significantly higher, again, closer to this, I don't know, 10, 17, $20 per share. And they could dilute, do some equity offerings at that higher price to raise the cash to then deploy their constellation as fast as they need to start then getting that money in from providing space service. So at the very least, they're going to have money just from the growth of the company, but they could even do additional equity offerings or a debt raise. I guess, it's possible to fund those aspirations even faster. And so again, that's kind of like, I think, the bull case for the company. And if we see that, throw these numbers out the window, right? I think, by 2028, 2029, if they're deploying their own constellation and they expect to start getting revenue in a year or two from that, the margins on that are going to be higher. It's going to be recurring revenue. So, I mean, you could see the company really go up quite a bit in terms of, the multiples they see in the company, because at that point, what they've done in the past is not what the market will be evaluating them on anymore. They'll be evaluating them on the future, and the future at that point would be very, very, very bright. So probably should not end the video without talking about just a bit about their, the biggest unknowns and the biggest risks. And really there's two major risks. One is, execution risk, right? They actually have to get Neutron working. I've said all of this, as if I think Neutron is a done deal. It's not. There's still a lot of work. A lot of people have to do. Things all have to go right. These are rockets. This is literally rocket science. It's not easy. Even though they've done it already with Electron, it's not a sure thing that Neutron is going to just work. I certainly hope that it does. And I think if anybody has a chance to do it, Rocket Lab does. But it's hard to say. So that is definitely a risk for the company. The other obvious risk for Rocket Lab is competition, right? SpaceX is already the number one. Don't kid yourself. Rocket Lab is, at least not anytime soon, not going to become the number one space company, not going to beat SpaceX. SpaceX has way more money, way more capabilities right now. I just think it's... so that's the risk, right? Is competition, and in particular SpaceX. There are other smaller companies that are potential disruptors to Rocket Lab, right? Other folks who are building their own medium launch vehicles. There are folks who might come up with new novel ways that nobody has thought about right now to provide space services that will compete with Rocket Lab. So competition is a very real risk. Lots of these things are not, they're not markets that are already validated, and Rocket Lab is an incumbent player other than in small launch and in those, space components they are. But a lot of the future aspirations, medium launch, and especially space services, competition is going to be humongous risk for this thing. So that's definitely something to take into account. But that's it, right? Those are the main risks that I see with the company. I think in terms of financials, there's not that much financial risk outstanding that's not sort of already covered by, the execution risk of Neutron needing to work. I think if they can make Neutron work, get that to the pad on time and launch, I think the finances are going to be just fine. I think the company will hit free cash flow positivity after a couple of Neutron launches once they're able to, have that capability and sign some contracts and actually do some launches for folks and collect that revenue. I think they're going to be in pretty good position financially to, be self-sustaining. All right. That was it. I know I say that was it after, talking for an hour and 20 minutes. But if you have any questions or comments, I will stick around for another minute or two. I I know Trainee Stacker was still on the stream and was on a bit ago, and so I think that's great. I know he or she was, said they were driving, so maybe they can't really get to the computer here. I will say, for anybody still listening, I usually do these streams on Sunday afternoons. This weekend was off. Last weekend was off because I was sick. This weekend was off partially because I'm sick, partially because other things are going on. I had to do my stream tonight. Not able to do it tomorrow, more than likely. But usually I do these on Sunday afternoons, Eastern U.S. time. Nothing else to really say for today. I guess we could open up just real quick while I'm kind of giving folks a chance to comment if they have anything else they want to, call out in the chat. We could look at, do I have Rocket Lab? I don't. It's not my recents. Let me look at Rocket Lab and see what it has done recently. It did get wow. It's at 740. That's right. I forgot. Rocket Lab's had quite a run up recently. I think it's priced in, quite a bit of hype around Neutron, which if Neutron starts to work again, you could see this price being low. You could see the stock going up even further as people start to give it credit for that, future growth. And I mean, going back to this model, like I'm talking about 2028 fair value share prices, or at least some relative valuations we could see. But, it's not like this is it's not like 50 is the max and 17 might be the, highest valuation that we could see. I think if you're looking at this, it's not impossible that people start to say, wow, this company has literally built rockets, right? They've literally solved some rocket science. It's hard stuff. They've got a major moat. The market is growing. You could see a 100p here. You could see even higher. You could see a 200p. It's not impossible. You could see the company spike up and stay up for quite a while. You think about like how large was the hype on Tesla in 2020, 2021, where they're like, man, Tesla's winning the EV space. EVs are going to be everywhere. This company is going to be worth so much money because they're just going to be selling EVs left and right. And they're the clear winner in this space. Depending on what happens, Rocket Lab might carve out a niche where they say, hey, SpaceX is going to take 70% of the market. Rocket Lab is going to take 30%. And guess what? 30% of the market is a lot. And so you could see the company really, really, go to the moon, as they say, in terms of the stock price. So although it has gone up, I would not, again, I look at the 6-month view and you can see it's hovering out in the 4s, the 3s. I mean, I was buying as much as I could down here. I didn't have that much cash for personal reasons, but I bought what I could very, very happily down here in the 4s and the 3s. Even in the 4s and in the low 5s, I was buying. But I think even though this looks like it's gone up a fair bit, you can certainly argue that this company is at a very, very, what do I say? Well, it's not a high risk, but it's definitely going to trade on sentiment, right? If people think, wow, this market is growing, this company is really solidifying a position in the market, it's not ridiculous to me that people are going to trade this at, high price of sales or high, price to earnings or future expected earnings for quite a while. I mean, all you have to do is look no further than what is the valuation for SpaceX that they've gotten, and it's ridiculous if you look at a price to sales basis. But I mean, they're getting that because the market's looking forward. SpaceX is the clear winner in the market, and they're saying this is going to be worth so much money because SpaceX can do what no one else can do. I think if and when people start to recognize Rocket Lab can do a lot of what SpaceX can do, you could see a revaluation for the company where the multiples that they get are much higher than they are today. So it has gone up. I can't argue this number on a fair value basis based on what they are doing, but the stock is not going to trade on a fair value. It's going to trade on sentiment of what the next 2, 3, 4, 5 years are going to look like for the company. And just because of the nature of the company, the nature of the market, where there just aren't that many players, it's a growing market. And I think, people are also viewing this a little bit like the internet in, let's say 1995 or 1999, where we don't yet have a full handle on what all the people are going to do with space. We're just now getting to the point where some things that were not economical before are economical now because of SpaceX, because of Rocket Lab, because of the other companies who've been able to drive the price down. They can launch things, much more frequently at a lower cost. And so that level of sentiment, as people start, again, I'm not saying it's going to happen. It could be that it drops from 746 down back to the $5 range and trades at $5 for the next year until Neutron launches. And even then, maybe it won't go up if they say, that was our only launch for this year, guys. We don't expect anything until, next year. People might not give it full credit, and hype it up too much, but that's, on the other hand, they could. So there's just so much sentiment in this stock if and when they deliver, which again, my model has assumptions on what they could deliver. Getting out into 2028, 2029, I think these are reasonable valuations that the fundamentals could support. And you'll see the even further upside based on whatever sentiment the market has for, what else the company is going to be able to do in terms of either growth for these segments or even going into the services businesses. So, all right, Transient Stacker says, thanks for the video. No one else has commented, so I'm going to hop off now. Thank you, Transient Stack, for, staying with me this whole time. I really appreciate that. I mean, it means a lot, that somebody actually was out there and, listening this whole time. So hopefully I was coherent, made sense. Hopefully you learned something. Let me know if I think you were the one who requested this, if I recall correctly. So let me know if there's, something else you're interested. I will try to dig into it. I can't guarantee I'm going to be, have as deep of knowledge on just any arbitrary company as I do for Rocket Lab. This is one that I've personally put a good chunk of money into and am, personally interested and bullish on, but I'm always happy to look at new stuff. So if there is something, feel free to comment here, or, I'm on X. You can, message me on there. All right, that is it. Thank you very much. Have a good day, everybody.